Were we all wrong about Bitcoin? We have just confirmed a new weekly candle right now, and it's very, very interesting what is happening on this chart. And I'm going to be going over exactly what we need to be prepared for as we move into the week. So make sure to like the video, make sure to subscribe to the channel, make sure to click that bell for notifications because I am bringing you the most timely Bitcoin updates on YouTube. So let's get into this. As I was saying, we have just closed another weekly candle for Bitcoin, and look at where we have closed it. This just so happens to be exactly on the volume area high of this massive range that we have been trading since June. Now, what does this mean? The truth is, guys, this is a very ambiguous signal, and the reason why is because this exact level of $22,900 is a very, very important level of support. If this level is lost, it opens up a lot more downside where potentially we could even see a move for Bitcoin all the way back down to the 18s or even lower. But as long as we are holding above this level, there is still room for upside. Now, we've all been expecting a pullback from this area, including myself. In fact, if we go to the 4-hour time frame, we can clearly see that as the price has been getting higher and higher into key zones of resistance, if we turn on our indicator here, Market Cipher B, we can see that we are indeed printing very, very bearish patterns where the money flow and the momentum continues to get lower as the price gets higher, giving us the very, very dreaded upside down Sam Bankman-Fried man boot pattern where we can clearly see the mammary glands getting lower as the price is getting higher into key resistance. But we have never seen since 2019 a bearish divergence this bearish lasting for this long without follow through. And the fact that we are now right now holding this key level still as support, bouncing on it exactly as the weekly candle opens is very, very interesting to me. So we need to be talking about exactly what we can expect. Now, of course, we did give the short setup from the top in the Casper Crew VIP Discord. We also did give the long setup from the low of the range in the Casper Crew VIP Discord. That is why I'm currently in multiple trades right now. And the way I like to trade personally is I like to take shorts from the top. I like to take longs from the bottom. I like to TP halfway through the trade. That way, no matter what happens, it's a guaranteed winner. And if you want to join the Casper Crew VIP Discord, where we give the levels and the trade setups every single day, we actually do 3 live streams a day. You can go to patreon.com/Jason Casper. Also, if you want to take advantage of 0% limit fees on ByBit, click the link in the description, guys. Of course, this is only for people who know how to trade with a plan, a strategy, risk management, and all that stuff. If you don't know what you're doing, do not ever leverage trade because you will absolutely lose everything. Make sure you know what you're doing first, please. So getting back to the chart, what do we really need to be looking out for right now? Well, the way I am looking at this and the way I'm approaching this is that we are trading in a sideways range and we need to be going down to a lower time frame to determine what is going to be happening in the future. First of all, it's very important to notice that our oscillator on the 4-hour time frame has officially broken the uptrend and is now printing a deep momentum wave below that 60 line, that negative 60 line on Market Cipher B. This means we can actually start to be looking for a significant bottom here. The 4-hour time frame is in fact cooling off. Momentum is starting to bottom out. So in my opinion, although I am still expecting and even maybe hoping for, because I'm short, a little bit of a pullback here, we need to be prepared for another bounce. So here is what we really need to be aware of right now. If we do get more movement to the downside, there are 2 very, very important levels that we need to be looking for as support. The first level is actually going to be basically this low that we have put in here on the 22nd of January. And the reason why is because everybody who has been entering into a trade here long has their stop losses below these wicks. That means if we're going to get a proper liquidity grab before getting a move to the upside, it would only make sense that especially next week as New York opens, we would get a move to the downside to take out all this liquidity as the momentum on these lower term timeframes is bottoming out, and then we can get another move to the upside. Another very important area of support that we have right now is going to be coming in around the $21,800 level. Now, why is this such an important area of support? If we go to the weekly time frame, we can see that this level is the last weekly high that we put in over here before putting in a higher high on the weekly time frame. And so it would be very, very nice to come down basically and retest this key resistance now as support before getting another move to the upside. Also, when we zoom in, we can see that this exact level of $21,800 is the Fibonacci golden pocket retracement from the low that we put in January 18th to the high that we just put in. So this right here is very, very important support. These are two major areas that we need to be looking for a bounce. Now, what will we be looking for to know that we're actually going to get a bounce from this level? Well, first of all, we definitely want to see this 4-hour momentum wave below that negative 60 line. But secondly, we want to make sure that we are seeing bullish divergences. What are bullish divergences? Bullish divergences look like this, okay, where we have basically a left momentum wave that is very, very deep, just like the one we are printing right here on Market Cipher beyond the 4-hour, and then we make another momentum wave that is actually higher. And if the price is getting lower here as the momentum waves are getting higher, this is called a bullish divergence, also known as the uneven butt cheek pattern, where we have that juicy left butt cheek and then that skinny right butt cheek, that skinny old butt cheek, you know, with the veins popping out of her neck, and she's always smoking a cigarette. She probably works at a diner. She still smokes inside because she's stuck in the year 1985. She's coming out here with a cup of coffee, limping along, because uneven butt cheeks makes you not walk too straight, all right? Dolores, get over here. This guy needs another cup of coffee. When the price is coming down to key support, right, we look at the butt cheeks over here. We're clearly getting some bullish divergences. Boom, we got to move to the upside. You know what I'm talking about, right? That's what we want to be looking for as we come down to these key areas of support. So this is what I'm looking for if we are going to get more of a move to the downside. But we do need to be aware that we could have found support right here. In fact, if you were watching my live stream earlier today, you know that we were watching and waiting for an entry. We actually did get that long entry. I did get that long entry exactly as what we were planning for over in the live stream. So make sure to like, subscribe, click the bell, guys, because we are out here giving the most timely, most accurate technical analysis that you can get for Bitcoin on YouTube, because I gave this exact setup live on YouTube before I took it. So there is a chance that we might get a move to the upside from here, okay? So if we get a move, what do we need to be aware of to the upside? We need to be aware right now of just the opposite of what we are looking for at support. There's a good chance that we don't actually put in a higher high here because of the fact that we are printing bearish divergences, and we need to be very, very keenly aware of the 23.7 level. $23,700 is now, if we go to the weekly time frame, just closing this weekly candle, we can see that these two candle bodies have given us this level of $23,740. And in addition to that, if we look at the Fibonacci golden pocket that can be pulled from the high to the current low, we see it lines up perfectly right there. So if we get a move right up to this zone, we need to be very, very careful coming up to this clear zone of historical resistance. And what do we want to be watching for? We want to be watching for, of course, the upside down uneven butt cheek pattern, where we see the momentum waves getting lower as the price is getting higher into key areas of resistance. So these are the major levels that we do need to be aware of. One more thing, we need to keep our eyes also on the dollar. If the dollar maintains its bullish pump that it has been getting since the day of Thursday, the 2nd of January, then we can expect more downside for Bitcoin. Also, we need to be aware of the S&P 500. The S&P 500 has just opened up kind of bearish. This is the futures market, but we also do need to be aware that this is a leading indicator for Bitcoin. So if we see the ES futures market, the S&P 500, continue to get a move to the downside, then we can also expect Bitcoin to continue to get a pullback. However, we can see right here, we're at a key level support resistance flip of 41,037. If we hold this tonight and we start to get a move to the upside, then we can expect Bitcoin to also hold support and get a move to the upside. One last thing I do want to talk about before I end this video, and that is this, and this is actually very, very important here. If we take a look at an order flow chart on the 2-hour time frame, we can see that for the majority of this entire range right here, pretty much everything we've been trading since the 21st of January, we can see that the majority of traders that have entered into their positions have entered into short positions. What does this mean? This means that throughout this entire range, we have seen traders entering into the market. People are putting their capital up for risk, and the large majority of these traders are shorts, okay? How do we know this? We can tell by looking at CVD and open interest. And by the way, guys, if this is something you do want to learn, you can check out the course at jasoncaspertrading.com. We have 2 courses. The basic course, this is for if you don't know anything and you actually want to do this the right way. We also have an advanced course that will go over order flow and everything you basically need to know about reading a chart, TPO, market profile, order flow. We can tell based on the open interest and the CVD that traders are shorting here, but the price is actually unable to make lower lows. In fact, price continues to make higher lows. This means be prepared for a potential major short squeeze that could honestly take out all the highs that we have put in right over here. Guys, these are all the exact levels that we need to be aware of right now and all the scenarios that we need to be aware of right now. So make sure to like, subscribe, and click the bell because I am out here giving you the juice for free. May God bless all of you in the name of Jesus the Messiah, Yeshua the Messiah, even if you are not religious. That is it for today's video, and I'll see everybody in the next video. Peace.